Hello guys, welcome again to another BTC update. I hope you're doing great today. I have a nice BTC update for you today. We're going to be focusing on the macro time frame, not the micros. As I said earlier in my YouTube videos and on Twitter, I don't think anything exciting is going to happen from now till the end of July. I think after July we might have a nice relief rally to the upside, but as of now, nothing extraordinary happening in the market. But I did find something interesting in the macro charts, which I really suggest people share this video a lot, especially with proper TA analysis, because it has come to my attention that BTC has done something that it has never done before, ever. Now, I know this year is different, and because this year is different, it's scary what's happening with BTC. And I would like more, more feedback on my analysis, basically from other proper TAs out there. With that being said, like, share, and subscribe. It means a lot to the channel. Follow us always, and as always, let's get started with the charts. So first of all, the good news. Let's go for the good news first, because the bad news is it's easy to spot. The weekly time frame is looking relatively good. Like, there is a bullish divergence forming on the weekly time frame. Most likely we're going to head towards the EMAs, the 18 and 30 EMAs, once we decide to have that relief rally on the weekly, which is still not confirmed, by the way, till that stochastic crosses above 20. And most likely when that happens, I think these EMAs will be coming in around 30k, and that's our relief rally, and that's our rejection. Breaking 30k, obviously, with the proper volume and force and proper breakout procedures, is definitely a real good sign for Bitcoin. Am I still optimistic, or am I still pessimistic? Where I am optimistic, I'm not pessimistic, but the charts are not that much optimistic. I'm going to be explaining the bad news. So the good news is, though, I think after July we'll have a nice relief rally. The bad news is the monthly time frame. So sadly, I don't have a lot of data on these EMAs. The furthest they go is till around 2014. So we don't have a lot of data on them. Maybe if I flip them to something different, like to another type of EMA. So I have the 50 EMA and the 50 EMA on the monthly. Maybe we can get a better accurate reading. I'll try it later, but I'm going to explain what I see and why is it so bad and what does it mean for crypto and Bitcoin in general. So first of all, before I get started with this, I just want to let everybody know that this year, or these 2 years that have passed for BTC and crypto, they really have been different years. So it's not fitting. Bitcoin is not fitting the same criteria as it has before. With that being said, these two EMAs, the 50 EMA and the 50 EMA on the monthly time frame, we've never really closed a monthly candle below these, and I was very optimistic that the monthly close was going to be above 21k, because I was expecting, that we are near bear market bottoms, and historically speaking, they are bear market bottoms. As you can see, in 2014 and 15, we didn't close below them. We just wicked below them, and we just managed to climb up, consolidated over like 6-7 months, and then we started to head up. And in 2017 and 18, the same thing happened. We formed a descending triangle right here. We broke down, and then we bounced on the EMAs. We really didn't close below them at all. We consolidated for at least 4 or 5 months, and then we started to head up in our bull run. And then 2019 and 2020, we had that COVID dump, and we did have a huge crash, and we did wick below them, but the monthly recovered pretty fast, and we did close the monthly above them again. Now we come to 2021, 2022. We have just closed the first monthly candle for Bitcoin under these two EMAs, which supposedly are considered bear market supports. Now, you can call it whatever you want. This is TA. This time it is different. So I know many people might probably say, yeah, Maze, but this time is different. That's why it's happened. I understand that, but from a technical analysis point of view, this is not a good sign for Bitcoin, no matter what anyone says. Now, it could mean nothing, and it could mean a lot. And when I say it could mean nothing, is because, we can say and we can argue that history is not going to repeat itself, and BTC is doing something different right now, and most likely it is. But the fact of the matter is that closing a monthly candle under what we consider as a bear market support is not something good at all. And we didn't close it like, not $500 or $200. We closed it closed around $2,000 below that. So that's a lot. It's not like that's around 7 to 8% close below. And the second month candle right now that we're looking at is looking like it's getting rejected of these EMAs. So let's make it very simple. This is not good news for Bitcoin and crypto. What does it mean? What does it potentially mean? It potentially means that we cannot analyze previous charts to try to determine bear market bottoms right now. And it probably means that the bear market that we are experiencing and that we have been experiencing since January is going to be completely different than the previous bear markets. Completely different. It could be very long. It could be very severe with super drops. I cannot tell you for sure because Bitcoin is doing something different. From a technical perspective, though, if I want to be relaxed and I want to have positivity about crypto, I need monthly closes above these EMAs. So I need Bitcoin to start closing monthly candles, consecutively monthly candles above, $25,000 or even $21,700. So if we do something similar to this, as you can see here, right? We close 1, 2, 3 months under the 50 EMA, but above the 50 EMA. So if we could do that, if we could, close monthly candles between these two EMAs at least for a couple of months, consolidate, build a strong base of support, then okay, the likelihood that this is bear market bottom, we're done, crypto is ready to rip, will be there. Obviously, I have my indicators which tell me when the bull run will resume. As of now, these indicators are still not bullish yet, so there's no real sign of bull run resumption yet. But yeah, I need consolidation between these EMAs or above these EMAs in order for me to be more relaxed and more optimistic about crypto and the future of BTC. Now, there's a big difference between crypto and BTC, but if we're talking BTC right now, I need monthly close above these EMAs in order to be relaxed and to be more happy with crypto. Now, if we don't get that and we start to get rejected of these EMAs and we start to, which we're experiencing, by the way, so we got rejected here slightly, even though this monthly candle just opened, but closing is what is important. So if we keep closing under these EMAs and we keep getting rejected from them, so we keep doing something like this, so we pump, we get rejected, we close the monthly below, we pump, we get rejected, we close the monthly below. If that situation happens, then you need to I'm not gonna say that crypto is dead, okay? I'm a firm crypto believer, but I do want to tell you guys that if this happens, the likelihood of this bear market being more severe and stronger and more painful than previous bear markets increases exponentially. If we cannot close monthly candles above these EMAs, like I said, I'm not saying this is going to be the end of crypto, but I am saying that it's going to be very, very painful. More painful than here, more painful than here, more painful than 2014. And by painful, it can be either through time, duration, or price action. But as always, in bear markets and in bull markets, there's always money to be made. You shouldn't be, you shouldn't buy these tops. You should buy the bottoms wherever they are. So like I said, and like I've been saying forever, technical analysis is a probability. So I might be wrong if we close below the EMAs and we just start pumping tomorrow. But I don't want to risk it. I don't want to risk this or that. So I'm going to invest smartly. I'm going to invest with money I'm willing to forget for a couple of years, 3, 5, 10. I don't care. I'm not going to invest with savings or loans or whatever. And I'm going to play it smart. I'm going to buy the bottoms. I'm not going to buy the tops. So even if Bitcoin goes to zero, right, it's better to buy Bitcoin where we are right now than buying it at $65,000. Now, people would say to me, but yeah, Maze, if we're going to head lower, why should we buy now? Well, we might head lower. That's what people don't understand in TA and in probabilities. We might, and there's a big chance, especially with the economy and the recession happening, there's a big chance that we might head lower and we might crash lower and we might even go, to Peter Schiff levels, like $3,000. Everything is possible with crypto and Bitcoin, but it's not guaranteed. So that's where DCA comes in. Because if you don't buy here waiting for whatever 10 or 11K, and then Bitcoin does it, 10, 20K pump tomorrow, which it does, by the way. Bitcoin does 10, 20Ks, 10 to 20K pumps easily. Then you missed out the bottom. You got screwed basically, and you missed out the bottom. So don't do that. Play it smart. Invest wisely. Take an amount of money that you're willing to forget for a couple of years. DCA it, and imagine this is your starting DCA journey. And like I said, I posted a Twitter tweet last time about when and how to DCA. If your token isn't down more than 20 to 30%, there's no point in DCAing. So if you see your token down 10%, there's no point. 15, 20, no point. But when you see your token down 30, 40, 50, 60, 70, those are the percentages that you start injecting liquidity in the market. So if you bought here, you need another 50, you need another 20, 30% drop on Bitcoin, which takes you to like 11K for you to DCA again into your favorite altcoins. If that doesn't happen, then you just sit on the sidelines waiting for a nice pump or a nice relief rally to capitalize on the dips that you bought. So that is the analysis that I wanted to say. So the weekly is pretty good. Like I said, no weekly confirmations of upside yet, no confirmation of bull run resumptions yet, but we do have this bad negative thing that I'm seeing in the chart, which is the monthly closes under the EMAs, which has never happened for Bitcoin ever. And it is, from a technical analysis point of view, it is scary. Now, Bitcoin did this year, right? Even though we knew, or people were saying that it's not going to happen, including myself, I was expecting a relief rally like this and a drop. Instead, we got a double top and we dropped. So we might get a huge double bottom before ripping. Everything is possible. Everything is really possible in crypto. Personally, I don't expect this level to break. That $10,000 region, I don't think it goes below that ever. But if it does, you've been warned already ahead of time that, there's a likelihood of this happening because of this. Now, obviously, we need data. We need more information. We need more monthly closes. In a few months, maybe 2 to 3 months, we will have more data on where this goes. If we get a second rejection in July and we close this monthly candle right here below the EMAs, that makes our theory of a more painful bear market, whether it's prolonged or price-wise, highly likely. And you need to be prepared for that. Don't be scared, though. I am very optimistic about crypto. I had a theory before about a painful bear market where people laughed at me. I called the video 10-year bear market theory. In my theory, basically, the bear market, the painful bear market, if you want to call it, is because institutions and big players are trying to remove the average Joe from the crypto markets in order to control it fully before crypto really pops up and lifts off. And the only way you're gonna destroy crypto believers is by giving them a more painful, an extremely painful bear market that they've never get used to. So people are used to 4-year bear markets. It happens, and crypto goes up again in the future halvings. 20. But if next halving comes and crypto is like $3,000 Bitcoin and $2,000 Bitcoin and nothing's pumping, then that will demotivate people. That will make people sell, and they will make the big players buy. And then when they buy, market will pump and they will get rid of all our retail and they will basically control most of the market, and the rich will still be richer and the poor will still be poorer. And that's the main goal, I think, in my personal opinion, to remove the average Joe so that the big players out there stay financially in control of everything. So anyways, thank you for watching the video, guys. Sorry it was a long video. I hope you enjoyed it. Like, share, and subscribe. It means a lot to this channel. Follow me on Twitter. Link in the description below. If you want to inquire about my private paid Discord, which has copy trading right now, my Telegram link is in the description below. Obviously, you can message me and I'll reply to you with a voice note just to verify I'm not a scammer. And if you don't want to join our professional traders, you can sign up to one of the 3 exchanges below in order to get, using my link in order to take advantage of copy trading if you'd like. So thank you again, guys, for watching the video, and I will see you again next time. Bye-bye.